everybody. I'm Andrea Lortangeli, president of the Buyers Division here at the Donnelly Group. And I'm joined today with David Ratti of the Ratti lending team at Envoy Mortgage. Welcome, David.
Thank you.
Well, unfortunately, we're seeing a spike in coronavirus cases. The state's mandating a little bit more restriction and shutdowns in some cases. So it's probably safe to assume we may see another round of job loss here coming up in the next few months. So what we wanted to talk about today, if you find yourself in a financial hardship, there are options. And today we're going to talk about one of them, which is a mortgage forbearance. So David, again, thanks for joining us. So what exactly is a mortgage forbearance?
A mortgage forbearance is a largely misunderstood feature that's available for debt. First of all, the forbearance is not a forgiveness of debt. I think a lot of people have the perception it is. It is simply a deferral of payments.
Yeah, and that's a good point because sometimes you do need that help. But it's good to know at the end of the term, which is what, David, typically about 6 months?
Yes, correct.
That you will have to do something with that debt that has been accrued over that time. So David, who would be the best candidate for forbearance?
Great question, because a lot of people look at forbearance because of the misunderstanding and think free money. But the reality is it's a vehicle for those people that have come under duress or hardship due to C-19. So for somebody who cannot make their house payment, it's a viable option to help them keep their home in that it will defer 6 payments initially, 6 payments to help them either find secure new employment or have their employer bring them back.
Okay, and will it affect their credit?
A great question. Because of the CARES Act that was passed in May of 2020, because of the pandemic, any deferment due to the forbearance does not reflect as negative credit on their credit report. And that's huge because credit reportings for payment history stay on there for 7 years.
Okay, yeah, that's a great point. So are there any negative consequences for doing a forbearance?
Certainly there's a potential for some negative consequences, and some of them not really readily seeable on the surface. First of all, remember the debt doesn't go away. So after 6 months of payments, if your payments are $1,000 a month, that would be $6,000 due plus the 7-month payment, 7th month house payment that's then due. So you would have to come up with $7,000 at the end of 6 months. Realistically, if you couldn't make your payments going along, that's not realistic. So that's definitely a concern for a homeowner. A second thing is if they can't make that lump sum, how do they work out of that? And most of the servicers are working out by securing a second mortgage on the home. In other words, they put a lien on the house for the $6,000, for example, which means you now have a second mortgage on your home. So if you wanted to get a home equity loan, you might be inhibited from doing so because a home equity loan is a second mortgage and you already have now a second mortgage because of that forbearance lien.
Right, and that makes sense. So, but if you are right now, you're at a person that lost their job or, God forbid, 2, people have lost their job within the household, it is a viable option. So you don't want to kind of suffer and delay. You want to do something now. And then kind of work out what can happen at the end of the forbearance period. So it's a vehicle out there that don't feel like you're frozen because you don't know what to do, because this is going to help you kind of defer those mortgage payments until you can find another job or make a game plan at the end of it. So, so David, if someone's interested in a forbearance, what should they do?
They should contact their servicer directly. So there are some guardrails that are part of the CARES Act that all servicers have to follow, but there's procedures that each servicer handles in their own way. So you want to contact your servicer directly to identify what their procedures are. One thing I will make people aware of is that the servicer is prohibited from requiring documentation to your hardship. So if they ask for it, they cannot ask for it by law. Just keep that in mind. You have to attest to your hardship, meaning you have to state what your hardship is, but no documentation is required.
That's a good point. So thanks for sharing that. So,
Sure.
of course, you know, if you're in this situation, as David mentioned, please contact your mortgage servicer directly. Of course, both David and I are here to help if you have additional questions regarding forbearance. So please do not hesitate to reach out to us. Our contact information is below. Or if you know somebody that's in this situation, please share the video. Information is important right now. So people really need to know their options. So David, I appreciate all the good information you provided here today. And next video, we're actually going to talk about if you did a forbearance, you know, last March, April, and it's coming due, what are your options to clear the slate? So join us next time where we'll kind of talk through that. So anyway, we appreciate you tuning in. If you have any questions, again, please contact us directly. And we're here to help. So have a great day, everybody.